Welcome to another video. My name is Nick and I'm a top podder on TradingView with over 260k reputation points. And here in the Transparent FX Academy, every day I share new free education and analysis. So make sure that you subscribe and I will see you on the charts. Okay, so in today's video, I will be speaking about USDJPY. Now, why do I want to speak about USDJPY? Because at the moment, we do have quite interesting price action and structure. So as usual, I will be providing a complete multi-time frame top-down analysis first. I will be covering the technical aspect. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that at the moment, the market has broken above this very strong area of previous monthly resistance here, again here, and again here, which after the market broke it to the upside, was obviously turned support and demand here. And as we are testing the strong area of support and demand, we did expect the market to create this rejection to the upside that we can clearly see here the market has just printed. Here on the monthly, everything seems quite bullish and we can expect more continuation. Dropping down on the weekly time frame, what we can clearly see is that the market has just printed this candle here. Now, when you see a candle like this with a very long wick and a green body on the weekly time frame, usually what happens is that the next candle fills in the wick. Why do you expect the next candle to fill in the wick? Because if on the weekly you have a candle like this, what you will probably have on the daily is an impulse and a correction, in which the correction on the daily is exactly the wick that we see here on the weekly. And after that, what you can expect is more continuation to the upside. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. Dropping down on the daily time frame, what we can see is a strong impulse and correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can clearly see how we have a 50% Fibonacci retracement lining up exactly at this very strong area of previous supply and resistance, now turned support and demand, that we do expect this market to reject to the upside. So monthly, weekly, and daily currently all aligning for a potential move to the upside. Now, if we go and see what is the positioning from an institutional perspective, we can see how we did have an increase of the net positions from minus 107k to minus 53k. However, we can also see how in the short term we have once again started to get net positions decreased, and anyway we are still heavily negative with minus 62k net positions and 103k shorts compared to only 40k longs from an institutional perspective on the JPY. And we see the weakness of the JPY reflected in the strength of USDJPY in the long term. So overall, the trend is supposed to continue to be bullish, so we can expect this potential continuation. And how we will be approaching this potential longing opportunity here with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the CO2 data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, we will be monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market and provide to us one of our valid entries, we would be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to potentially provide and create a higher high. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.